Hello and good day. My name is Klaus Oldix. I'm a German citizen and live in the city of Pilsen in the Czech Republic. In this video, I talk about copy trading. Who asks for this service and why? Which brokers are preferred? And what investors should consider. Trading usually involves taking risky market positions over a short period of time, such as in day trading, open and close market positions intraday. This reduced time span can already be part of risk management, as any overnight risk or weekend risk is permanently excluded. Highly liquid financial instruments are traded. For example, currencies, stock indices, bonds, or commodities such as metals like the precious metals gold and silver. Experienced traders often specialize in a single trading instrument. Traders mostly deal in derivatives, that is, futures contracts or contracts for difference, CFDs. The traders are not looking to hold an exchange-traded instrument over a longer period of time as investors do. Traders are looking for a rapid price change in the financial instruments they trade. If the direction, the trend is right, whether the price goes up or down, profits build up quickly. If the direction is wrong, losses accrue just as quickly. The leverage factor. To make trading reasonably profitable, a leverage factor is applied. This simply means that an instrument, be it a stock index or gold, is held for a short period of time at, say, 10% of its actual market value. If the price changes by 10%, the trader has made a profit tenfold on the margin required by the broker for holding the instrument. This means roughly 100% gain. However, this leverage factor can also work in the less favorable direction, generating corresponding losses. Copy trading. From what has been said so far in an overview, it is clear that price changes with leveraged financial instruments require undivided attention if risks are to be kept within certain limits most of the time. Many institutional trade positions are executed independently by algorithms or AI. A solution offered to private investors is trading with a selected Trustworthy Trader. This approach transfers all trading activities to a chosen trader who monitors the market and places orders. Copy trading positions. The trader selected by the investor has his own account with a reliable broker. If investors want to participate in the trader's results, they also open their account with the same brokerage company and can then easily connect to the trader's account after accepting the terms and conditions. Choosing a suitable broker is crucial. Structuring copy trades. Anyone who connected his trading account to the head account of a trader lets his account run automatically. Of course, the link with a trader's account can be terminated at any time. Only the account holder controls the activities on his account, and no one else can intervene, let alone trade without consent or make fund transfers. The personal name account is therefore protected from unauthorized access and, in this respect, absolutely secure. Advantages and disadvantages of trading. Those who can quickly gain a lot of profits due to the leverage factor already described can also lose just as quickly. However, the loss is limited to a maximum of the account balance. Conversely, the profit can be several times the initial deposit. Understanding this risk asymmetry makes trading attractive to anyone who can and wants to afford it. These sophisticated financial transactions I call luxury ventures, for which funds are left over and are not needed for everyday life. In my case, as a day trader with a copy trading service, I will observe the market movements in front of the monitor screen and place or cancel orders in the markets. For this working activity, an agreed performance-based fee is received. You always should keep in mind, reliable forecasts regarding future results are fundamentally impossible. Extrapolating past profits into the future always is a mistake and should therefore not be used as an assumption of future results. Therefore, I do not publish results from the past. Many examples have proven this fact over the years again and again. Do you remember LTCM, where even Nobel laureates in economics failed dramatically with their consulting services, resulting with billions of dollars in losses? Cost of trading procedures. The costs associated with trading are a factor that cannot be ignored under any circumstances, although this is often grossly neglected. Brokerage processing costs vary greatly, and the more frequently positions are taken in the markets, the more significant they become. Choosing a suitable broker in this regard can therefore be of great importance. Copy trading services almost always include a profit share appropriate to the efforts involved, ranging from 10% up to 50% net, as is also the case with all well-known hedge funds. These often charge 2% upfront and 20% performance fee. One of the highest fee I remember was set by the late Jim Simons, founder of Renaissance Technologies, which managed the Medallion Fund with 5% upfront management fee every year and 44% performance fee. The results were absolutely outstanding and far surpassed results by any other well-known celebrities in the stock markets. Fortunately, without upfront fee, performance fees do not affect the capital invested, but only the profits actually achieved, which allows the account to grow under favorable conditions. Interaction: broker, trader, investor. A copy trading service is useful for, firstly, participating brokers because they work in a professional way with knowledgeable traders who don't have to deal with often simple and naive questions from new customers, which is not directed towards regular trading business and requires qualified advisory consultants with increased personal costs. Well-established brokers expect traders to master trading techniques and are only willing to provide intensive training if it helps as a marketing measure to acquire and retain new customers. You should be aware of the fact that the vast majority of all new traders lose their money according to a simple 90-90-90 rule of thumb. 90% of the initial investment is lost within 90 days by 90% of the newbies. Secondly, the trader who offers copy trading as a service has the advantage of increasing his income, which he himself already achieves with his own account, in addition to the potential profits through profit sharing from the linked accounts of his clients. And thirdly, the investor doesn't have to spend a lot of time monitoring price movements or learning specific skills required for effective trading. This creates a classic triple win situation. for anyone who embraces the motto risks are opportunities and can afford to put it into practice with bold commitment. For now, that's all I have to tell you here about trading in this video, especially my way of copy trading as a service. If you have any further questions, I'm available to answer them, for example, in the comments section on my YouTube channel, Klaus Oldix, or using the displayed QR code with all required relevant data. So if you are interested to get linked to my trading account, be it individual or institutional, you are welcome to contact me via the communication channels provided, or by visiting me in Pilsen or Munich, or in a meeting at any other location of your choice. If you can afford it, you will find the right way to get access easily and instantly. For today, greetings from the beautiful city of Pilsen, your certified financial investment specialist, Chamber of Industry and Commerce, day trader with a copy trading service, and physicist Klaus Oldix. I wish you much success with all your investment decisions and, generally speaking, all the best to you.